Welcome and good morning, ladies and gentlemen, to our morning pitch battle here in the precious metal Mines and Money online session. And happy to have you all again here on board. The idea behind is, of course, to see who can win 1 million virtual dollars with our three contestants, which I name in a second. And we have also fantastic judges who will do a lot of Q&A with our contestants. And my name is Jochen Staiger. I'm the chief editor and founder of Commodity TV, and happy to bring you through this hour. Let me first of all introduce our contestants. We have first running Harry Anagnostaras-Adams, who is the executive chairman of KEFI Minerals. Then secondly, we have Don Smith, managing director of Tempest Minerals. And last but not least, Mike Jones, managing director of Impact Minerals. Also, we have here 5 judges who will do then the Q&A with our contestants together. And we have first Bert Koth, who is managing director and partner of Denham Mining Fund from Denham Capital. Then secondly, we have Pear Wimmer, the CEO of Wimmer Family Office. Then Michael Colligan, partner of Blue Lake Advisors. Then lovely Amanda van Dyke, managing director of Arch Emerging Markets Partners. And also last but not least, John Hodder, who is the co-founder and managing director Australia of Tembo Capital. And we look forward to a beautiful session. Each contestant will present 3 minutes. Afterwards, we do 8 minutes of Q&A. So let's get started. Harry, the floor is yours. Please start with your presentation. And we are now listening to KEFI Minerals.
Well, thank you for the introduction and for the opportunity to present today. KEFI is an AIM-listed company, KEF for Freddie I, market cap approximately £40 million or $55 million. Very briefly, in 2 lines of history, is that we IPO'd in 2006 to explore frontier markets. And for the last 12 years, we've focused on the Arabian-Nubian Shield. In that time, we've made 2 significant discoveries in Saudi Arabia and made an important acquisition in Ethiopia. The reason I'm on here this year really is that 2021 is a pretty auspicious moment for the company. In fact, the most auspicious moment in our history, because not just because the cycle has turned for everybody, but in our particular case, there are 2 points of inflection coinciding, as much luck as good management, to be honest. But nevertheless, our 2 projects are taking off right now in the 2 countries, our 2 main projects. And our host governments and partners in both countries are not only supportive, but really quite pushing the sector very hard, in which we're first mover in Ethiopia and nearly first mover in Saudi Arabia. Our resources and reserves, our reserves are 1 million ounces at 2.1 gram open pittable gold in Ethiopia. And our resources in gold equivalent terms, because we do have some copper and zinc and silver in Saudi as well. But in gold equivalent terms, our JORC resources are 4 million ounces. They're all open. They're open at depth, these deposits. Therefore, they'll be bigger, but we don't know how big yet. And our beneficial interest is 2 million ounces. In terms of our market cap per ounce, it's $28 per ounce resource, JORC resource. Our funding approach, obviously, our approach to exploration funding was principally either JV or a combination really of JV and equity capital. But in terms of development capital, we're essentially funding it at the project level with some small exceptions, but almost entirely at the project level. And in particular of relevance at this moment is that project financing closing was triggered in December amongst the senior lenders and others in the syndicate for the Ethiopian development for closing at the end of March this year. So that's a very significant step forward, and construction then begins and production 2 years later. The Saudi Arabian project is growing. We've got 3 rigs running, drilling hard, because it's a large VMS system that we only discovered last year, but it's growing, and we put out an announcement this morning because it's I wanted to talk about it here today. To wrap up, at $1,700 gold, our NPV on Tulu Kapi is 5 times our market cap. and the Saudi project, Hawiyah, looks bigger again.
Harry, sorry, those were your 3 minutes. I have to stop here. I'm very sorry.
Okay, well,
but we have to make it for everybody correct. Yeah, thank you very much. Now the questions from our judges, please. Who wants to go first? Raise your hand. Michael, please unmute yourself. Yeah.
Takes a second. Harry, politics in Ethiopia, have you been affected at all by the difficulties in Tigray?
Tigray is as far from Addis Ababa or our project as Belfast is from London, or in fact a bit further. So the conflict in Tigray was about as relevant to us in Addis Ababa or Tulakapi as conflict in Belfast is in London. Having said that, elevated security precautions.
Having said that, I had a bomb go off. Harry, having said that, I had a bomb go off in front of my flat in 1978 in London because of Belfast. So.
Okay, well, as I said, there needs to be elevated security around any mining project in Africa, generally speaking. Independent assessment, if you like, rating of security and sovereign risk by Constellis for the banking purposes is that it rates about the same as Ghana and Turkey, safer on the scale than, say, Mali or Burkina Faso, to give you some sort of measure.
Okay.
Bert?
Yeah, Harry, you maybe ran out of time, but you haven't shared any metrics with us, like what's the capex, what's the all-in cost, what's the annual production, just really the most important back of envelope numbers to assess the project. Can you please elaborate on that very briefly?
Yeah, I actually finished my presentation. I thought you'd ask all those things, but I mean, the Ethiopian development, which is being financed now, is a 1 million ounce reserve, 140,000 ounces from the open pit per annum for 8 years. The underground will start about year three of the open pit. So we're looking to take the combination up to about 190,000 ounces. Metrics in terms of costs, all-in sustaining costs, it slides with the gold price at 1,700. It's a bit over $900 an ounce. It slides with the gold price because I'm including royalties in that number.
Yep.
And royalties obviously move. What else? Over in Saudi Arabia, the project capex. The Ethiopian project is $290 million package. The mining contractor puts up 70, the senior lenders about 140. That leaves about 80 off the top of my head. Project partner is the government. They're putting in 20. Sub-debt coming in 30. And local equity will do a little bit as well. We're not quite sure how much yet. And the balance will either align, within that syndicate or just raise it in the public. But essentially, something under, five or something around. We've invested about 70 million in the country already, us and our predecessor, and the project finance will cover somewhere in the order of 90-95%.
And how much of the economic benefits are attributable to you versus the Ethiopian partner? So let's say you generate, just back of envelope, let's say you generate $500 million cash flow. I'm using any number, right? If that were the number, how much of that would flow to Ethiopia versus into your shareholders' pockets?
Well, Ethiopia's as a partner, they have an equity share just like us. But as a fiscal regime, if you like, they have a 5% free carry interest. They have a 7% royalty, 25% income tax. We've got obviously the tax deductions of the historical expenditure and the capital expenditure. The royalties are a bit heavy, but this project carries it quite easily. But it's a fairly normal fiscal regime, 5% free carry, nothing too aggressive. The rest is just as a partner, as a 20% shareholder.
Amanda?
We will own 65 to 75%. depending upon the level of locals coming in.
Yep. Amanda?
Yeah, can I actually ask about Saudi? Can you give me the breakdown of the grades of the different elements and what your resource target is in terms of growth on the 4 million ounces equivalent that you just suggested?
Yeah. The maiden resource was only published about 6 months ago, a bit less, I think. After only a few months of drilling, that's 19 point something million tons, 2% copper equivalent. In terms of value content, it's about half copper, and then gold, then zinc, then silver. In terms of metal content, it's copper, then zinc, then gold, and silver. In terms of target resource, in order to, let's call it, make it bankable, it needs another, I would say, 10, 15 million tons of that order, depending on the grade. We announced only this morning, so I could talk a little bit here, an update, because we've continued drilling and we've got 3 rigs running away there, hammering away. But it's continuing at plunge, and we've added, off the top of my head, 5 to 10 million tons so far, I'd say, in what we've added in the recent drilling. The grade's gone up a bit, but we expected it to. It's a large VMS system, and the predictions based on the geological model that as we get closer to the feeder zone at depth, that the grades would increase, and that appears to be what's happening. And we don't know how big this will be, but I'd say it's approaching economic or bankable feasibility over the next few months is the way we're going. Okay, and last but not least, there's not a lot of foreign investment in resources in Saudi. Can you tell me a little bit about the fiscal regime and the regulatory regime that you're working under? Yeah, well, we've been there 12 years, and I'd say that most of those 12 years has been a waste of time for most foreigners trying to do any work there. It was like wading through treacle. We elected up front to cross a very important structural bridge. We accepted to be the operator, but the minority shareholder with a major Saudi partner who's a major industrial conglomerate. So we're a Saudi company, which is why we did get things done. The Saudi partner is Atta, the industrial arm of the Al Rashid family. They're in the top 50 lists internationally. It's not royals, it's a private company that have operations in the US, England, Europe, so on, Asia. And right now, the fiscal regime is about 20% tax for foreign gold producer. And there's no royalties, so it's quite benign from that point of view. The important thing, however, is that there's an aggressive leadership in the country, even the new mines minister. And
I'm very sorry, but I have to stop you. It's over 8 minutes. Sorry for that.
Quite an ambitious overhaul of the... No problem.
Harry, can you? Yeah, no, I'm very sorry, but we have to be correct for everybody. Thank you very much. Great questions, great answers. Our next contestant is Don Smith, Managing Director of Tempest Minerals. Don, the floor is yours.
Hi there. Thanks everyone for listening today. We're talking about Tempest Minerals. Sure, you've read a disclaimer before. My partner's currently reading Alan Trench's new book, and it got me thinking about the 5 Ps of strategic management. And so today I'm going to do the 5 Ps of Tempest Minerals. We've got profile, people, projects, potential, and promotion. Profile-wise, we're a Western Australian-based company exploring and developing here, and we have what I believe is a borderline ridiculously small market capitalization of $9 million. People-wise, we have a rich talent pool. We have at least 3 PhDs in geology on our team and direct industry expertise in what we're doing. We've got Brian Moller, who many of you may know is a big name, as our chairman, and our non-exec team makes us qualified not just to be an explorer, but also to make that jump from explorer to developer and producer. Culture-wise, we're strong believe in sustainability, in science, and also in technology. And importantly, everyone in the company is an investor in the company. Everyone has shares, and that makes us highly incentivized to make something of this. We have a diverse portfolio within Western Australia of commodities, and all totaling about 1,000 square kilometres. Our current focus is the Yalgoo region. For those that are unaware, it's about 400 kilometres north of Perth. It's I guess it's a bit of a forgotten gold field in that it has at least half a dozen world-class mines there already, but not much exploration or development since the 70s. And it's been a bit of a rush there in the last 12 months. A lot of companies coming in to take advantage of that because of its proximity to Perth, but also that it has first world infrastructure, has 2 highways, rail, power, water, and telecommunications all there. So the barriers to entry for development are very low. And however, we have the first mover advantage. We've been there for several years. We've got a very large land holding, as you can see there, with known mineralization. And also we've rewritten the geological maps there in the last year or two. And the prospectivity of finding yet more of these world-class mines is quite real, let alone the development opportunities of the mineralization that we have already. So in terms of our potential, we currently sit in the projects category over here. We have known mineralization. Just before Christmas, we made a new gold discovery of an intrusive related system at one of our projects. We have a bunch of drilling into another known gold mineralization at the Messenger project coming in the next month or so, as well as the ongoing exploration we're doing, which has, again, we've rewritten the geological model there for the entire region, and the chances of finding yet another Golden Grove or a Rothsay, these are world-class VMS and million-ounce style gold deposits. It's quite
Thank you very much, Don. Thank you. I don't want to be rude, but we have to hold the 3 minutes. Sorry for that. Please stop the screen sharing. And now back to our judges.
Yeah, it's Pear here. I can go.
Second.
Oh, sorry.
Yeah.
I'm having.
Can you stop the screen sharing, please?
I'm not able to at this moment. That's challenging.
You just go down. Stop. Yeah, exactly. Here we go. Super. Thank you. Now, who wants to be first with the questions?
It's Pear here. I can go first with a question. A couple of quick questions. What's your path to a JORC resource scoping study and/or PFS, etc.? And what's your planned spending for exploration for 2020 and beyond? And how does that match up with the current balance sheet?
Excellent question, thanks. The first one is that, as I mentioned, we have a number of known mineralizations within our project already. One of those, we're currently putting together a resource based on the historic drilling there. A lot of that drilling was done in the 1990s when the price of gold was substantially lower than right now. And we believe that we could probably get an economic inferred resource out of that right now. And the path to production for any of our projects is not that challenging, as I said, because the barriers to entry are quite low in terms of infrastructure and spending. However, there's a number of underutilized processing facilities right next door to us within kilometers. So any resources that we are able to generate, we can easily put into those mills at short order. In terms of our spending, we are going to spend every bit we've got. We're not a lifestyle company. We're here to find things. So we have drilling starting next month, and we have $1.6 million in the bank, which will certainly last us 6 months or more.
Who's next? Thank you. Questions? Yeah, Michael?
When was your last financing?
Our last financing was at the end of last year. We did an entitlement offer so that the existing shareholders weren't overly diluted, and we did a cap raise on top of that. Okay,
is it like a rights offering?
Pardon me?
It's sort of like a rights offering?
Yeah, rights offer, that's right, yeah.
Okay, and how much did you raise at that time?
A bit over $1 million.
Okay. There is obviously a question. with your low capitalization, how do you leverage things up to production? What do you think? What's your thinking on that?
That's a good question. The answer is that we've got the technical expertise to do it, and the leveraging of the capital market cap it comes from us bringing through a lot of good news flow. So I didn't get to our promotion slide on the, but we have a aggressive drilling program coming in the next 12 months, and so there'll be a lot of news flow coming from that. And to be honest, we were a lithium company until late last year when we rebranded, and now this is a brand new story for the market. So that's one of the reasons I'm here is to let everyone know that we have this great story, and our market cap's partially a reflection of the fact that no one knows about it yet.
Yeah, Amanda, please.
In terms of the drilling you're doing and the interpretation of old results, do you have a target in mind for your primary project? One, and two, you had about 10 projects on there,
Yes.
What kind of exploration budget or what work are you doing on those, and what's the plan for those?
The first one is we've got a modest target at the existing data where we're looking at something like 50,000 ounces, but obviously I can't confirm that till the work's done. But obviously the potential in the area is substantially more than that. We have 3 million ounce deposits within a few kilometres of us in the same geology, as well as 40+ million tonne, one of the highest grade BMSs in Australia, if not the world, again in the same geological package. So while you are correct that there seems to be a lot of projects there, a lot of them are literally one big area, just focusing on different structures.
Okay.
There was a second question there, sorry.
Just in terms of your other projects, what's your plan for the management or development of those?
Yeah, okay, so we have a data-driven and staged approach to everything, and that usually involves a data analysis followed by surface sampling, and then that going into drilling.
Who wants to be next? Questions? Yes, John?
Hey, Don.
Hi, John.
Tell us a bit about your analogies in this area. What are you chasing? Classic vein, greenstone belt sort of geology? What?
Look, at the risk of being evasive, we have at least three targets there. There is vein gold geology. We've already discovered that before Christmas. There's also intrusive related gold systems, which we believe are analogies to Pogo in Alaska that Northern Star has, or even though it is different geology, there is an analog to what De Grey has done at Hemi, and we've been looking into that for several years now. That's not a new idea, but the big game is finding another Golden Grove. So we have at least 50 kilometers of a long strike of the same rocks as Golden Grove, which is a felsic volcanic, and that entire sequence that we have, no one has ever had a license there in history, and it's not undercover, it's sticking out of ground, it's just been missed. So I wasn't joking when we said we've rewritten the geological model of the area. We have 50 kilometers of Golden Grove rocks that no one's explored before, and given that the Yalgoo belt has a mine, simplifying, but a mine every 10 kilometers, the chances of us finding something is pretty high, I think.
And why was that missed? Why was that part of it? Was it mapped incorrectly by geological survey?
Quite simply, the government geology maps are quite wrong. So, and that's not being disrespectful, but it's a fact.
It happens. Okay.
Yeah.
Thank you.
Bert?
When you say you got 50 kilometers of Golden Grove rocks on the surface, can you be a bit more specific? Does that mean whatever there's a geochemical signature that's the same as Golden Grove, or does it mean the outcrops? Because it's just an easy comment to make, but what does it actually mean?
Yes, and that's a very astute question. Thanks, Bert. You're right. It's an easy thing to say. However, I am a scientist at heart, and I wasn't willing to make that statement without a lot of background. And if you look through our announcements over the last 12 months, you'll see that we did wide space geochemical sampling over the entire thing. And we were hoping to find any hint that there was some sort of mineralization, but the entire thing came back as anomalous. And in our field work, we also found that, as I mentioned, it's not undercover. These rocks are sticking out of the ground. And one of the PhDs I mentioned on our team is Dr. Anthony Morey, who used to work at Golden Grove, and he's done geochemical analysis of these rocks that show that they are exactly the same.
Last question. Do we have one more? 15 seconds. All right, super. Yeah, then it's anyhow 8 minutes now. Don, thank you very much. Well done.
Thanks a lot.
And yeah, now we come to our last contestant, Mike Jones. Please come up here and show us your video. Managing Director of Impact Minerals. Mike, those are now your 3 minutes.
That's great. I'm assuming everyone can see the screen.
Yes.
Okay, I'm going to assume the judges have made a lot of money in the last week on their GameStop, covering the GameStop stock, and they're ready to take the next big gamble. And we've got 3 rolls of the dice for you at our Broken Hill and Commonwealth projects. Tier 1, one of the best places in the world to be working right now. It's all action in the resources sector in Australia at the moment. We've had a massive discovery, PGMs at Chalice. We're here for the big bang. We're not a project generator. We're a grassroots exploration company looking to give you a 10-bagger in the next 6 months as we enter an exciting phase of exploration. We've got the next most promising PGM play in Australia, in my view, compared to Chalice. It's a world-class palladium discovery emerging just north of Perth. We're in the right space, EV, ESG, we've got nickel and copper, common shareholders with Azure, they're another big nickel copper player. And we also have an outstanding copper gold target right next door to the Boda discovery, which was made by Alkane Resources over the last 18 months. So we'll be drilling both at Broken Hill and Commonwealth over the next 6 months. And look, Impact Minerals, we're built on technical excellence. And as an example of that, we have what we think is possibly a global first, certainly in the speaking out in public. We've discovered a vector to high-grade PGM mineralisation using metals that can be measured in a handheld XRF. PGM exploration is very difficult. They're very fine-grained, have to send them to the lab, can't see them. And we've got something that we can use in the field to move the drill rig back and forwards as the drilling progresses. It's revolutionised our exploration and led to significant breakthroughs at our Broken Hill PGM project. The relationship shown here is log linear, and once you get above 10 and 20 on our particular ratio, things are starting to get exciting for PGMs. This is our drilling at our Platinum Springs project, which we'll come back to. I just wanted to show here, this is coloured by the ratio, and colours in red and white are lighting up. And we've proved by the assays that this is the area where we're getting PGEs. And what it's been able to do is allow us to sort of move the drill rig around, and for the first time in 30, 40 years of exploration here, understand some of the controls on the mineralisation on this very exceptional high-grade mineralisation that we have at Broken Hill. So one of the big breakthroughs we announced just before Christmas is that we've got we've ended up with a channel at the base of the unit, and it's got some very high grades. This is the sort of thing we're looking for. 0.6 meters at an ounce plus PGEs. It's got grams of gold, 15% combined copper and nickel. We're in the right place. Another project, the second roll of the dice, the Little Broken Hill, similar story. First ever drill program there. We're ready to roll on that. And then finally at Commonwealth, on our absolute target, we defined a perfect example of a porphyry copper gold target, and we'll be drilling there next month with a zinc donut. Hate to mention zinc donuts at the end of this, but I'm sure we're all hungry this time of the morning. Thank you.
Thank you very much, Mike. Perfect in time. Thanks a lot. Please stop the screen sharing, that we can go back to the normal. Thank you very much. So now 8 minutes with our investors. Who wants Bert? You raised the hand.
How much does each roll of the dice cost?
So we've got 5,000 meters planned at our absolute Commonwealth porphyry copper target, and probably somewhere up to say between another 5,000 and 10,000 meters at Broken Hill. So you can call it 5,000 meters per test. So call it $1 million.
It's Pear here. In terms of the, I appreciate this is very early stage and stuff, but if you were to, what's your gut feeling in terms of the value in the ground when it comes to palladium versus platinum? Because obviously, if you look at the outlook for these metals, platinum being somewhat challenged, if you look at the futures outlook, given diesel and what's happened to diesel cars, whereas palladium potentially looks a lot more exciting. You also got copper and gold and that sort of thing. So what's your gut feeling in terms of where this thing could go? And secondly, what's your total sort of planned burn rate for the next year or two, and how does the balance sheet look to match that?
No, sure. So to palladium, so the ratio is approximately 2 or 3 palladium to 1 platinum, and so we're on the right side of the of the equation that you talked about there. Obviously, palladium is still being used extensively. Platinum, lots of talk of platinum making a comeback in hydrogen fuel cells, and you can weigh those up against your lithium batteries and the like. Certainly, hydrogen fuel cells are being promoted heavily around the world. So I think that there's no danger in the short term of the demand for, certainly for palladium, dropping off. And one of the things we don't talk about is that we have exceptional grades of rhodium, iridium, osmium, and ruthenium in there, sort of grades of between 1 and 5 grams per ton, and those are unheard of. So this is an exceptionally special deposit. It also has the high grades of copper and nickel in it, percents nickel and copper, plus it's got gold and silver, because of some very special reasons about where these things formed. It is literally the richest ore in Australia. If we can find more of it, there will be nothing like it anywhere in Australia that has that value dollar per tonne. Going to the balance sheet, yes, look, we've got about 2.5 million in the bank. We will be starting drilling in about a month. Obviously, if we're going to spend 3 million and we've only got 2.5, there'll obviously be a raising along the way. But look, we're as confident as we've ever been. Impact's been around for a long time, but I've never felt more confident that we've got the best chance ever of a success in the next 6 months with our 6 months solid drilling coming up at both of those projects.
And if I may quickly follow up, a quick follow-up question, just timeline on your sort of key milestones ahead of you, scoping study, PFS, and that sort of things. Do you have a sense for how the timeline might look there, subject to capital being available?
Well, assuming that we get our $1 million from you, we'll be able to start drilling sooner rather than later. Look, if everything goes according to plan and we get the breakthrough, let's say we get the breakthrough at Apsley, look, it's a standard process. There'll be, I don't know, a year or two of drilling to get the resource, to get up to resource level, then the feasibility studies. Australia is a great place to work. It's not a Belfast, it's not Ethiopia, but it's Broken Hill in particular is an unbelievable place to work. On both of our projects, there's no native title. It's freehold. The governments are very supportive. So Sirius got Nova Bollinger up and running from start to scratch in 5 years. So I would say, that's the kind of time frame we might be looking at if we get lucky with our $1 million.
Mm-hmm. Michael, you were next.
Yeah, very quickly, Mike. What are your announcements that are coming up in the next 6 months?
So we've actually still waiting for a significant number of assays to come through for both Broken Hill and Commonwealth. We've got probably 4 or 5 batches of assays to come. So we're going to have a strong news flow up into the main drill program. We're fast tracking Commonwealth because whilst we didn't dwell on that with the porphyry copper gold target, the IP has given us immediate drill targets, and we've got 18 drill holes planned. And the correlation between the geophysics and the geochemistry is nothing short of extraordinary. I don't say anything I say is not spoken lightly. It is the best target I've seen in my entire career. And the chance of us making a world-class discovery in that drill program over the next 6 weeks are exceptionally high. And so we're obviously hoping that the news flow is going to be strong. But if that doesn't work, we've still got Broken Hill. It's another fantastic, world-class target. There's a lot more work to be required there to sort of identify the target zones and actually home in. But our breakthrough ratio, which I really can't emphasise how much of a breakthrough that is in PGM exploration, has been an exceptional tool for us, and will certainly help us in the tricky business of PGM exploration.
Mm-hmm.
So how many
Amanda? Sorry, Amanda was first. Sorry, Bert.
Absolutely.
A couple of things. I'm not sure if you mentioned it, but I didn't see I didn't hear your market capitalization, 1, and 2. Can you talk a little bit more about the sort of potential size of the, and also the nickel and the copper? So we stayed on the PGM bits, but the nickel and copper grades were pretty impressive. But the question is, what's the potential for size there?
Yeah, sure. Sorry, what was the first question again?
Market cap.
No, market cap, that's right. It's late on a Friday here, you know, we've been to I had to go and get a few beers when I went down to the pub just at lunchtime, just to calm my nerves. Okay, market cap, so we're sitting at around about $30–35 million at the moment. And like many rising tides lifted all boats in the last 6 months, so it's pretty healthy, getting up there. And then in terms of the nickel and copper, so the particular thing about Broken Hill, yes, it's got all 6 PGEs, and they occur on their own. But the important thing is that when you're in the pockets of massive sulfide, they are exceptional grades. They're right up there, the 5%, 6% copper and nickel. It's an almost unbelievable set of numbers when you look at them. But so far, they've only been found in very specific structural locations. And until we came along, nobody kind of really understood where those locations were. It's just sort of random high-grade bits that people couldn't put together. But based on my experience at Kambalda, we sort of worked out that, hey, there are these sort of particular channel structures. We now know that that's what's controlling the high grade. We've been able to track one over sort of 50 to 60 meters. But what we're hoping is that, like many of the nickel copper deposits around the world, is that it goes out to hundreds of meters, if not a kilometer, which is what they do in the Kambalda field. So I don't know, you could do the calculation on how much that all would be worth if we found a kilometer long at 20 meters wide and 7 meters thick. It'd be pretty extraordinary. So that's at Platinum Springs. Really I didn't talk about it in the preso, but at Little Broken Hill Gabbro, the very similar to Jinchuan, large and low grade. So
okay, I think Bert has a quick question before we're out of time.
Yep, that's great. Thanks, Amanda.
Yeah, 2 quick ones. So on the PGM, how many holes drilled and how deep? That's question number 1. Question number 2, how much money do you need to spend before you know there's a viable project or not? 1 positive drill result or 2 doesn't make a viable project. What's the binary risk capital that you need to spend?
Yeah. So we at Platinum Springs, we have drilled probably about 44 drill holes, of which the last 25 we had a basically 80% hit rate on the
I'm very sorry. You have to send him an email because it's 8 minutes 20 seconds. We have to be fair to everybody. Thank you very much. Thanks for the good questions. And now please switch on all your screens again, your video, that we can see you. Now we are coming to the voting. So we have listened to KEFI Minerals, we have listened to Tempest Minerals and Impact Minerals. And I will start here in the running order as I have it. Bert, where goes your million? And please, if you make it short in 1, 2, 3 sentences, huh?
I split my million into 2 parts to make life more complicated for you, Jochen.
Super.
So $500,000 goes to KEFI simply because of the proximity to production. The other half goes to Mike because the 3 rolls of the dice. I think, Don, it does not go to you. Apologies for that. And the reason for that is because I think in the shape of the bet and just in terms of all the equations, proximity to cash flow and all of that and option value, I think yours is also good, but I think it's not as good as the other 2. Sorry, mate. I'll buy you a beer in West Perth.
No worries. You know, our office is right next door to you, so you can buy that beer. No worries.
Exactly. So I'll make up for it. So I split the millions.
Okay, super. Thank you. Pear Wimmer from Wimmer Family Office. Where goes your money to?
Yeah, thank you very much. I thought it was honestly 3 great presentations, well explained, at various different stages. 2 fairly early stage and the final one sort of close to production. So I really loved all of the presentations, very well explained. Bottom line, gotta allocate. Our focus is on the project finance side normally, i.e. close to production, and therefore being knocking on cash flow is where I want to put my money. So $1 million goes to KEFI.
To KEFI. Mm-hmm. Okay, thank you very much. Then we have Michael Colligan, Blue Lake Advisors. Where goes your million?
Well, if I could, I would split it 3 ways. I'd give $500,000 to KEFI and 250 each to the other 2, but I can't. So I really have to say that from an investment standpoint, as opposed to a speculation standpoint, KEFI's the best bet. I'm with Pear. I'd go with the full million for KEFI.
Full million for KEFI. Okay, thank you very much, Michael. Then we have Amanda van Dyke from Arch Emerging Market Partners. Where goes your million, please, Amanda?
I'm afraid that I concur. I think from an investment standpoint, the sure thing. It's the risk-adjusted return for $1 million is definitely with Harry for me, just because it's a lot of money and you want your best chance of return. But what I would also say as a different sort of runner-up is I would definitely put some money into impact, because it is a gamble, but it's the kind of thing you put into your personal account. And I think I might actually put some money in there.
Super. Thank you very much, Amanda. So the full million goes to Harry from KEFI, right?
Yes.
Just to make sure. Good. Thank you. And then we have John Hodder. Where goes your money in? From Tembo Capital.
Oh, this is a tricky one. Thank you for 3 good presentations here. For Tembo, we're probably closer to the development stage, but I did like both the other presentations. So I may split my money half into impact and the other half into Dons. How's that?
Mm-hmm. Okay, super. Yeah,
I think the risk return looks quite dynamic there. You know, especially around Broken Hill. That looks very interesting, guys.
Okay, super, John. Thank you very much. Nice. Yeah, thanks to everybody, and we have quite a clear winner with 3.5 votes, and that's Harry Anagnostaras-Adams from KEFI Minerals. Congratulations, Harry. It's a nice start for the weekend, I would say. Yeah, thank you very much to our contestants. 3 good presentations, and also thanks for taking the time to the judges. As we know, we are all very busy these days, and for taking the time and asking good questions. That was the Friday morning pitch battle at Minds and Money Online. I wish everybody a wonderful day and, of course, a fantastic weekend ahead of us here. And yeah, take care, stay healthy. That's the most important thing. And hope to see you soon, latest in November. Hopefully, we can do a physical Minds and Money in London. That would be fantastic. So all the best of you. Thank you very much. Farewell and bye-bye. Thank you.
Thank you, guys.
Bye.
Thank you. Bye.
Bye.
Bye-bye.